With SoFi Active Invest, you can get in on IPOs prior to them being traded on the stock exchange. Access alternative investment funds that include venture capital, real estate, and commodities, and trade stocks, ETFs, and options, all on an intuitive platform that's easy to use. Plus, you'll even get a chance at up to $1,000 in stock when you fund a new Active Invest account with at least $50. Brokers and active investing products offered through SoFi Securities LLC, member FINRA, SIPC. For a full listing of fees associated with SoFi Invest, please view our fee schedule. Investments are not FDIC insured, are not bank guaranteed, may lose value. Probability of a member receiving $1,000 is a probability of 0.028%. For more information, including funds, investment objectives, risks, charges, and expenses, please head over to sofi.com/invest. Before we begin, please note that this conversation may include forward-looking statements. These statements are subject to risks and uncertainties, which are described in the company's SEC filings and investor relations materials. The views expressed in this discussion are solely those of the guest and do not necessarily represent the views of the host or the show. This discussion is for informational purposes only and should not be taken as investment, legal, or tax advice, nor as a recommendation to buy, sell, or hold any security. You should always consult with a qualified financial advisor or tax professional before making investment decisions. The host and guest disclaim any liability for losses that may result from reliance on this discussion. Remember, all investing involves risk, and past performance is not a guarantee of future results. Welcome to Marketopolis, at the crossroads of Wall Street and the internet. In a feed-driven era powered by Reddit, Robinhood, YouTube, X, and many other platforms, retail investors drive the conversation online. Corporate access has been blown wide open. Conversations move at the speed of social platforms, and CEOs, IROs, and comms teams are rewriting the investor relations playbook in real time. I'm Matt Giuano, CEO of Stakeholder Labs. Each episode, I talk with public company CEOs and top operators to uncover fresh strategies for communicating and competing in today's markets. Whether you hold a single share or just love the story, they'll take away practical lessons for navigating modern public markets. This is Marketopolis. Let's get into it. Today on Marketopolis, how a college side hustle beanbag company became a $700 million platform brand with the ticker LOV. I'm Matt Giuano, and my guest is Shawn David Nelson, founder and CEO of Lovesac. We get into how he evolved from shredding foam and opening stores to running a public company, why hire better than you and let them own it is the heartbeat of Lovesac, and how a couch you bought 10 years ago can upgrade with a click, recliners, stealth tech, new fabric without the landfill guilt. We also talk about navigating a home goods downturn while staying profitable and buying back stock, the wild story behind securing the Love ticker, and Shawn's audacious mission to make Lovesac the most loved home brand in America. I care about building products that last and companies that outlast. This one's for you. Let's jump into it. Hi, Shawn. Welcome to Marketopolis. Excited to have you on and talk a little bit about your journey with Lovesac. Would love to kick things off just by telling us a little bit about your company and your journey as CEO of Lovesac.
Yeah, I mean, Lovesac's a saga, right? The book, the podcast, Let Me Save You 25 Years, aptly named. It's been now 26 since we started the company, and it was my side hustle in college. I thought it'd be funny to make a big beanbag. People loved it, and finally decided to start making more for friends and family. Had our first sale on the lawn at the University of Utah in 1998. And had to wait tables for 3 years to pay my way through school because this little business didn't make any money, but it was a funny thing to do. Fast forward, and we'll fill in the middle. Lovesac today, about 700 million in sales, climbing toward $1 billion. We sell mostly couches. We make these really clever couches you could have the rest of your life if you really want to. You can add to them, change them, rearrange them. Probably seen them on TV, and have all kinds of other really cool expansions in the works because we make things that are built to last a lifetime, but can evolve with you as your life changes. And we think that's a really unique and valuable philosophy.
Yeah, it's been an incredible journey. And I know you've talked a lot of other places about the founding story and the initial years. I'd love to focus on your journey as a public company CEO. And maybe we start out today. What does your life look like as a public company CEO? And then we'll go back and look at in 2018 when you guys IPO'd, how was that maybe different? What have you learned along the way? So very curious to know, what is your day like as a public company CEO today?
Yeah, my role has changed dramatically, to say the least. I mean, like most bootstrapped startups, I shredded foam, stuffed sacks, made deliveries. in the earliest days for a long time, actually, for years, and then opened stores. We have 300 stores today, but I used to drive around the country opening them, working them, hiring managers to replace me so I can move on to the next one. All along raising money, been through VC, private equity, now public, starting 2018, went public about 100 million in sales, has, 7 exits since then.
Sure.
And it's a very different role. Each one of those stages and all those in between, my role has continued to just morph. And as they say, you either adapt or die. So clearly I'm far removed from stuffing sacks and even working in stores, although I push myself to do that with some regularity, get out in stores, work the front lines, stay in touch with customers, but add investors into the mix. I used to have to worry about my private equity investors and keeping those relationships tight and keeping them up to date on the business. Now I have 1,000, 10,000 bosses, people that own the stock that are interested in our success, what comes next. And so the communication layer of that is some chunk of my time now, especially after earnings. We report earnings quarterly, as one does, and you have this window where you can be talking to your shareholders, taking phone calls, meeting in person, trying to help them understand the business so they can place their bets or not. And that's a big piece that, of course, never existed before. Meanwhile, the way that I've come at it as a founder, I have this Shawnism in the book: hire better than you and let them own it. And I really believe that with a lot of conviction. And I had to learn that the hard way. In the earliest days, I had people older than me that I brought on with great experience to help out. But if I'm honest, I was that impetuous founder who kind of had to have his way and approve everything and be part of everything and, feel like the man. And through a lot of failure, through a lot of resets at Lovesac, did I have to learn the long, hard way that method is not sustainable. And in fact, these people who I'm lucky enough to even attract to be part of my organization, they really can be brilliant. I mean, they not only do they have great education, maybe, but their experience, they got a decade or 2 or 3 decades inside of a monster corporation, maybe, where they had mentors, they had training programs, they had experiences at scale, in the billions of dollars in many cases. I never got that. How could I possibly think that I know what they know? Mm-hmm. And so when you really learn to embrace that and let them own their purview, and if you can't trust them to own it, then you probably don't have the right person. Mm-hmm. Or you have your own trust issues or your own, delegation issues. But if you can get great people and really let them own it, not only will they stay, because everyone loves autonomy. Everyone loves autonomy. And autonomy is hard to find, and it doesn't mean it's complete. I don't think I'm not completely autonomous. I'm beholden to my shareholders, but I have a lot of autonomy. And because, by the way, I have even more because I've surrounded myself with these fantastic operators that frankly run the business. And I say that without any hesitation because they're really good at what they do. And that frees me up then to do the things that I'm uniquely good at, like product development, and really put time in there. Where if I were the sole operator of this business, or the lead operator of this business only, I wouldn't have time to be messing around with that. I focus on content creation because no one else in my company can do that like a founder can. And in this day and age, it's relevant. I focus on leadership, obviously. And honestly, my main job is to hire and retain those people. That's my main job.
I love that. And that idea of attracting talent that's better than you, that has experience that you don't, looking at yourself, your leadership team, when you guys enter the public markets in 2018 versus today, has your philosophy changed? A lot of people will say you kind of have 2 jobs. You have one, navigating the public markets, engaging with investors, doing your earnings call, and then you still have to run your company and grow your company. So how do you and the leadership team balance that? And how has that maybe changed over the last, call it 7 years since you guys went public?
Well, first of all, the main job is to run the company and run it well. If that's happening, the investor part gets a lot easier. It's an evolution that, the business, we've always been able to attract great talent all the way. But the bigger you get, the more resource you have, the more momentum you have, it's not even better is not the right word. Different talent, right? Like the kind of expertise it takes to run $1 billion, $2 billion company is simply different than it was at 100 million even. In every realm, supply chain, human resources, creative, marketing, obviously. And then the landscape's changing underneath you. The marketing landscape's significantly changed from even 2018. Retail landscape, we run showrooms and of course online. We have opportunity to go international. So I could go on and on and on. It's constantly changing. It's constantly shifting, and your talent has to be constantly changing. I'd say upgrading, but that's not fair. We've always had great people. It's just that these different chapters require different people in many cases, not every case. We also have people that have been with us for decades
Sure.
of their lives and have grown into roles, and that works as well. It has to be changing always.
Yeah, that makes a lot of sense. And I think looking at your brand, how you guys communicate with the market and to your customers, it's definitely been an evolution. You guys had a great campaign recently, I saw with Kathy Hilton and Jay Shetty, Funny Marco. How do campaigns like that come together? What are you thinking about when you're trying to tell the brand story, reach these customers? What's that look like internally?
I mean, that one came from an amazing agency that we enlisted to help us conceive of a really fun launch for our recliner. The recliner for Sactionals has been long overdue. It's a really special product that's, exceeded our expectations in terms of its performance. It's been one of our most successful launches ever. We have a huge installed base of Sactionals owners that are, think it's pretty cool that now, the product they bought 10 years ago can be upgraded to do this. I mean, that's the heart of our brand. But to be able to tell that story in a way that cuts through the noise, leveraging celebrity, leveraging influence, having a sense of humor, a path to some interesting content, that's always the challenge. And so in that case, an outside agency was involved. A few briefed it to a number of agencies, came back with this idea, and then executed the idea. And it was fantastic. And definitely did the work we needed it to do. And did it go mega viral? No. Have we had different things along the way go mega viral? Yes.
Sure.
You can't necessarily force that to happen, but you, as I like to say, like another Shawnism from the book, right? We make our own luck. The only way you're ever going to get lucky is by being in the game and trying to get lucky over and over and over again for as long as it takes. And occasionally you get lucky. And so in this case, it went great, had great outcome, and a successful launch.
Yeah, you have to take those big swings. And you guys have a brand that's been around for a very long time. As you guys have transitioned to becoming a public company, how do you think retail investors, you mentioned 1,000, 10,000 plus investors now, how do you think retail investors discover you? Do you think some of them are potentially customers, they've seen your brand, they're aware of your company, maybe they've seen you online, you've got very strong social presence, but how do you imagine individual investors are discovering Lovesac?
All the ways. I mean, there is no single channel anymore. Obviously, media generally is more fragmented than it's ever been. It's only becoming more fragmented. So I'm always on. We're always on. I'm on it personally on Instagram, TikTok, LinkedIn, take your pick. I have engaged in a lot of social media content. Meanwhile, with earnings comes the opportunity to go on the Schwab network or CNBC occasionally, those sorts of things. We
Sure.
pursue the PR of it. word of mouth. It doesn't hurt to have 300 physical showrooms around in the best malls in the country. People stumble across us that way. They like what they see. The customers, of course. I mean, Lovesac really stands for something. And if your brand is remarkable, as I think Lovesac, look just by name. And we get people every day that walk by a store and they don't even come in, but you can hear them kind of making fun of it or singing Love Shack to each other or what. That's remarkable. We elicited a remark out of their mouth to their friend, right? And as dumb as that sounds, being remarkable, and we call it remark-able at Lovesac, where you can actually elicit a remark in your marketing, in your social stuff, in the way you show up, in the showroom experience, in the product. We make products that literally could be with you for decades. People talk about this online. Our number one source of awareness as a brand is word of mouth. I mean, that's remarkable in action. And so it's all of the things. It's always on. It is tireless. It is endless. It is exhausting. And you can either embrace it or not.
I love it. And you guys even have the ticker Love, which is very unique and very powerful. Was that hard for you guys to get? Was that available when you went public?
Yeah, man. I mean, I'll tell you too, the book, Let Me Save You 25 Years, Mistakes, Miracles, and Lessons from the Lovesac Story. I'll give you two miracles related. The Lovesac name wasn't available when I went to open the first store. We had been operating for a few years as a side hustle from 1998. We opened the first store in 2001. People wanted to franchise it immediately.
Wow.
And I had to tell them, like, we had the business registered in Utah, so we could use it above our store, but we couldn't go out of Utah because I didn't have a national trademark. And it had been taken since 1978, renewed every year. And, we opened before Christmas. Christmas rolled over. All these people wanted a franchise. I said to my attorneys, well, just check one more time before we had to change our name to some stupid other name. We had a list. And at that New Year rollover, it went fallow, wasn't renewed, and we bought it for $250 from USPTO.gov after 20 years of re-registrations.
No way.
Meanwhile, yeah, the LOVE ticker was taken, and it took another sort of series of events to allow us to capture that. And I mean, that came down to everything from courting, some of the people at NASDAQ by taking them on my boat, doing fun things with them to, that's how you get lucky.
Yeah.
How you get lucky. You get yourself in the game, you try everything, you turn over every rock. And I'm really grateful. And look, this brand, just like its ticker, is destined to become a legendary brand. And I know it sounds ridiculous from this little beanbag company that's still, kind of eking along. But we are building a Nike. We are building an Apple. We are building a Disney, a Tesla. We are building a thing that is going to be here for 100 years, be known for the best stuff. Not just the bougiest stuff, not the most expensive stuff. Our stuff is expensive, generally speaking, but like just the best stuff. Stuff that's built to last a lifetime and can evolve with you as your life changes. And there's very few things you own. Of all the stuff you own, Matt, there's very few things you own that can do that. And all the stuff we make will do that. And I think that we will, on that foundation, that philosophy, we will surprise a lot of people. That will be a remarkable outcome and will result in a brand that means something, a brand that people love, a brand that people trust. And that allows us to then do almost anything if we're careful about it.
Yeah. And I think you guys were early on that unification of the consumer brand and the financial brand, the ticker, and having that LOVE ticker is powerful. And I think we live in a world today where there's almost 130, 140 million retail investors in the US. Every millennial Gen Z person is investing in companies. They've got Robinhood or Schwab or E-Trade on their phone. And so there's the dual context when a lot of these people are shopping. They're aware that, hey, these are companies that we can invest in as well. When you look at that, do you assume that potentially some of your customers are also shareholders? Is that an overlap that you're seeing, or is that something that because you guys are newer to the public markets hasn't really taken yet?
No, actually, I don't really think about it that way. I would love that to be the case, and I would certainly celebrate. And I get told that, I'll be working a store. And in fact, I've had people buy the stock in front of me. Like they'll meet me. They don't know it's me at first. I'll try and sell the couch. They're there for an hour. They fall in love with the product. Their mind is blown by stealth tech. Our surround sound embedded in the sofas, all this cool stuff we have, because it is really cool. And next thing I know, they're like, just bought your stock, and
I'm an owner.
yeah, it's so cool. And I love it. And frankly, I love being a public company. I love the transparency of it, the realness of it, the onus. Like, I have to do well. I'm the founder of the company, but if I don't do well, I'm out. If I don't show up and really contribute. And look, every company has its ups and downs and its challenges. Right now, the home category is in the dump. It's been 3 years of attrition in the broader home category, because COVID was such a huge pull forward. Everyone was at home buying couches and buying things. Meanwhile, Lovesac's grown. Lovesac's kept it steady. Probably the best performance, at least at the top line in the category, actually, but it's painful, right? Because we're fighting it. Our category is down 40% over the last 3 years. Meanwhile, we've held our revenue at that place, and we're looking forward to, getting back to significant growth. And we have a path to that through a lot of our inventions that are coming, whole new things. But regardless, we have to continue to perform. We have to continue to deliver earnings. We have to continue to deliver cash flow. And I love that. You can't hide behind, well, I've got a big daddy private equity group that'll just keep writing checks or whatever. Like, public companies are where it's at, in my opinion.
Yeah, there is a transparency and a continual need to prove and justify the valuation, the future prospects of the company. I think we see the voices across social, and we see the financial communities on Reddit, on Twitter, places like StockTwits, even some of these investor apps, they have social features. Do you look at how people are talking about your stock in some of these online financial communities? Even you personally, I'm always curious how public company CEOs, are you looking at your stock just on a brokerage app? Do you get an email report every day? Like, how do you track the conversation and sentiment around your stock on a regular basis?
To be honest, I don't pay a lot of attention to it. Of course, I'm aware where my stock is at. Everyone, and it matters. Like, I don't mean to be flippant. Like, we all want the stock price to go up. That's good for everybody. But my obsession is around running a great business that is profitable, throwing off cash, and has a future that can go on for decades. That's it. That's what I'm focused on. And I mean that sincerely. And that's what's beautiful about having a long-term outlook like I have. And when I say I mean literally I have. Like,
Sure.
I made the decision at some point in this time arc, man, I've gone 25 years. I never expected that. All right, I'll go 25 more. Now, we all know that could change. Like, I could be taken out, replaced, fired, move on, die, who knows what. But my attitude is I'll go 25 more. And when you have that point of view, 3 years now of sucky headwinds in this category won't break me, won't break my team, doesn't cause them all to leave for greener pastures. We'll get creative. We'll manage our SG&A. We'll, create whole new business lines, product lines, channels to go on offense. Because you're undaunted by the short term. You fall short on a bonus here or there because the metrics are so tough. It sucks for everyone involved, but whatever. We're trying to build a Disney. We're trying to build a Nike. We're going to stay focused on that. And so meanwhile, I mean, look how wild it is. You can buy our stock today for the same price you could have bought it, I don't know, 2 weeks after our IPO, I think.
Yeah, sure.
We were 1/7 the size we're at. We weren't even profitable. Now we're profitable, throwing off cash. We've been doing stock buybacks. And you can, like, how lucky is that for you? Like, how cool is that? I don't get to do that, really, for the most part, because I can only buy during open windows. I have heavy restrictions, etc. Look, I obviously I believe Lovesac is a great story with a great future, and And I really do believe in the fundamentals, even though I would love to imagine ways to, see the stock pop off some good news or this or that. The truth is, over time, we will deliver more sales, more earnings, more cash, more strength, take more market share. And I think this company will be worth many times what it is right now. That's my point of view. When will that happen? Your guess is as good as mine. And if I said it, I'd be in trouble. So
We did take a look at social, and there is a lot of enthusiasm across different communities on Reddit and Twitter. One thing we saw was on Twitter, now X, calling out the Van Leeuwen partnership. Would love to hear how that partnership came together, or just how those types of partnerships come together. How do they fit into the business growth story? And what do you guys think about when you try to launch those types of partnerships?
we love collabs and weird ones. Lovesac's a weird brand. In our first store, we actually sold more t-shirts than we did sacks. And that was with no brand recognition, like from the name to the vibe to the, I guess the attitude of it. Lovesac is a brand. And by the way, that's unique in home furnishings for sure. And so we've done collabs in the past with Stacey Bendit of Alice and Olivia, high fashion collab, with Kids Super, this latest one. We've done different brands, Van Leeuwen ice cream. But the Lovesac lifestyle is an easy lifestyle. We want you to be happy at home and watching a movie on our Stealth Tech couch, and ice cream is not irrelevant. And Van Leeuwen is, the Ferrari of ice cream. So it's fun to be involved with a cool brand doing cool stuff. And we just like messing with cool people. And I think our brand deserves to play in those realms. So we seek these out. They seek us out. And whenever we can, we say yes. And we create some cool product collabs with them, do some cool co-marketing on social media, especially, et cetera. And that's something we'll do more of, not less.
Yeah, I love that. I think kind of building off that, do you look to any other companies for inspiration, product cues? Who are companies out there that you like how they do things, whether it's collaboration similar to the Van Leeuwen one, or just how they build their business in general?
Man, I have a deeply bifurcated love and hate relationship with Apple. We are product fanatics. We are quality fanatics. We too care about how the guts of our product look, feel, the integrity of the materials. We love the platform approach, like you buy into this Sactionals platform, it's way more than just buying a couch that can do what it does. I mean, it's endless. Here we are, more than 20 years in the life cycle of that product line, and we're still coming up with cool inventions. Our most recent recliner invention, the most successful invention ever on the platform. Stealth Tech will go to new levels. So the platform lock-in approach in a friendly way, right? We don't want you locked in because you're locked in. We want you locked in because it was such a good investment. I want it to keep going. And I kind of believe in this idea that I don't need to just go out and buy a new thing. I can refresh this, upgrade it, change the covers, buy some new pillows. They're a click away. We just met, Matt. I guarantee you have a couch in your life. And if it's not Lovesac, if I challenge you to go get a new back pillow for it, could you?
No.
What model is it? Where did you get it? Do they make it? Do they have that color anymore?
Mm-hmm.
I just added a piece to the chair right out here. About 5 years ago, we never drop our fabrics just for that purpose.
Wow.
That's a platform approach. So we get that, of course, from Apple and others like it. On the other hand, Apple's going to con you into thinking you need a new device every year. Meanwhile, they're going to take back that one, likely bury it in Africa because we don't want to bury it in our soil. Strip mining the earth of all these elements and minerals and useful materials, just so Apple can be the biggest company in the world, which is cool. Good for them. They win. But that's garbage, and people know it, and people don't like it, even though they're stuck with it. I'm an Apple user, and I'm embarrassed about that. So then investors say, well, how are you going to grow? If everyone buys these couches and they have it the rest of their, look, we'll add to it, we'll grow it, we'll change it, we'll refresh it, we'll do. But that's the point. We must invent into other categories. Apple should have been forced to cure cancer by now. Solve traffic. I don't know.
Sure.
They've got more resource than any planet on Earth. I mean, any company on the planet. They've got more, 100 billions in cash. They could have done anything. And instead, they'll just keep figuring out ways to con us into buying the same object over and over again. And so Lovesac flies directly in the face of that. We will take our philosophy and invent into other categories, and we'll grow this company into many billions, I believe. And I think be wildly profitable, but most importantly, establish a brand that people will love for the exact reasons that I'm explaining to you right now, because we are totally sincere about it. We're not joking around. I want you to have our stuff for the rest of your life if you want to, and it will provide a way for that to happen if you'll let us.
I love that approach and the platform empowering your customers and giving them something that they can have for years and build on top of and continue to expand. We're getting towards the end, have a few more questions. So when we look at platforms like Reddit, X, StockTwits, there's a lot of amateur analysts on there who are analyzing the Lovesac stock. They're doing deep dives. They're maybe CFAs, maybe not. And you have this community of investors online. You kind of said some of this, I think, in the last answer, but what would be your message that you would send out to retail investors and individual investors that have bought into Lovesac, believe in what you guys are building? What would you tell them today?
First, I would tell them to believe exactly what I'm describing. We are not joking about how we think. We're not joking about our commitment to the public markets in the sense that we are here to drive sales and deliver profits. We're old school like that. We will do that even through the hardest of times. We are demonstrating that right now. Like, how wild is it that these last 3 years, categorically, not for Lovesac, for the home category, the entire home category, these last 3 years have been worse than 2008, 9, and 10. Definitively, by the numbers. This has been a radical recession in the home category because of the pull forward through COVID and, the pullback on free money for consumers, in this realm. So we've demonstrated that even in the worst of times, and these are the worst of times, we can generate profits, we can build cash. And even if you see our cash fluctuate on a quarter by quarter basis, we wouldn't have been buying back our stock unless we were very confident in our cash position. And so, I try not to pay too much attention to, the armchair analyst, and not out of disrespect, but just because, again, I'm focused on running a great business and the stock will take care of itself. At the same time, I see tidbits here and there, and all I can say is that you can criticize Lovesac for, let's say, its current levels, its current levels of profitability or whatever you're not satisfied with. But I am very confident in our ability to continue to deliver a more efficient business, a more capable business, and a dominating brand over the longest term, and even do well as a business in the nearest term, because that's what we're focused on. And anyone who wants to cast aspersions on that, I believe is probably interested in shorting the stock, which is a really ugly reality. The fact that I can't say much about what we're doing inside of Lovesac for insider information purposes, but people can just abjectly make things up about what they think is going on, and they don't even have to say, like, I have to say things like, I believe, I project, we hope. They don't have to say that. They can just make crap up and cast aspersions on what we're doing or what they, whatever, and then go short the stock. And so the only real way and sustainable way to counteract that is for us to just go crush it, to generate great results, both in the near term and the long term. And that is what our team's focused on. Our team is really good.
Last question on that, kind of shifting gears to 5 years from now. What are non-financial KPIs that get you excited? What will be fulfilling 5 years from now? What will you feel like for you?
I can say it in one phrase. It is our stated mission at Lovesac. We will be the most loved brand. We will be the most loved home brand in America. And 10 years after that, we will be the most loved brand in America. So we may never be the biggest because Apple's leveraging what I think are dystopian methods to achieve that. But we will be the most loved. And if you can achieve the most loved brand in America, maybe the world, it's probably pretty valuable. It's probably pretty big. It's probably pretty successful. And it's probably doing great as a stock. So that is our goal. That is our stated mission. Our purpose, by the way, is different. You know, it's trendy for companies that have purpose. Ours is to inspire humankind to buy better stuff so they can buy less stuff. And so we're very clear on both our purpose and our mission. We'll become the most loved brand in America. And I'm on a warpath to do that. Your best peek into behind the scenes at Lovesac is through my socials. I'm Shawn of Lovesac on every platform. Slide into my DMs on Instagram. I chat with customers and anyone. It's my own two thumbs. And happy to connect with you across all socials that way. Or, of course, lovesac.com.
Well, Shawn, thank you. This was a pleasure. Really enjoyed the conversation. And I think the listeners will enjoy hearing your perspective, how you think about these things, and just your journey. So thank you again. And we'll have to have you on again soon in the future.
Thanks for having me.
Thanks for tuning in to Marketopolis, powered by Stakeholder Labs. If you enjoyed this episode, make sure you're subscribed so you don't miss upcoming conversations with the leaders shaping modern investor relations.